The May labour force survey showed that the Australian labour market remains in good shape. There were a couple of surprises in the data. In particular, the level of employment declined by 2,500, which was a little bit weaker than what we and the market were expecting. However, this modest decline came off the back of a surge in jobs growth of over 87,000 in April. After smoothing the data for these volatile reads, we see that employment is still growing at 2.3% per year, which is quite a strong result by historical standards. Now, this small decline in employment was met with a slight pullback in the participation rate to 67%. Importantly, this allowed the unemployment rate to hold steady at 4.1% for a fourth consecutive month. This now marks around a year and a half where we've seen the unemployment rate hold around the 4% mark, which really highlights the current strength of the labour market. Across other areas of the survey, average hours worked rebounded back up to its long-run trend following a couple months of disruptions around Easter and ex-tropical cyclone Alfred. This seemed to have helped the underemployment rate tick lower to 5.9%, telling us there are relatively fewer people that are looking to pick up more hours of work at the moment. For the RBA, the fact that the headline measures of slack remain more or less unchanged from a year and a half ago suggests that the labour market is still tight relative to full employment, meaning it continues to pose some upside risks to inflation. We have questioned the strength of this view for some time, given the clear easing in wages growth and underlying inflation we've seen over the same period. The RBA do seem more open to the idea that the upside risks to inflation coming from the labour market may not be as bad as they thought before, but we do not think they will back away from their view just yet. Overall, we're still comfortable with our view that the RBA's next rate cut is more likely to occur in August. The board is aware of the downside risks to global and domestic growth at present, but they are also wary of the uncertainties involved. Against this backdrop, the RBA have made it clear that they want to adjust policy in a cautious and predictable manner, and so they will likely remain patient, wait for another quarterly reading on inflation, and give themselves time to assess global conditions before the balance of risks are re-evaluated.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.